Good morning, students. Welcome to the sixth class of costing and taxation. And we were doing income from house property. So, we had already finished the computation of income from house property in category 1, that is property let out throughout the year, and we were doing calculation of income from house property under category 2, that is property partly let out and partly vacant. So we had done that how to calculate GAV when there is vacancy, when the house is empty, then how do we calculate the GAV? So I had introduced some concepts to you, that something like whether the assessee is honest or dishonest. If his annual rent is more than the expected rent, then he's an honest assessee, then and we'll consider his vacancy. If his annual rent is less than the expected rent, then he is a dishonest assessee and his vacancy will not be considered. So this honest and dishonest, it is just a concept for your understanding, and you don't have to write it in the exam that he is an honest or dishonest assessee. Okay. So in today's class we'll do an illustration, and after that, if we have some time left, hopefully we'll do some more concepts. So these are the particulars of the sums, and let's start the sums. So my municipal value is 6 lakhs, fair rent is 5 lakhs, and standard rent is 4 lakh. So my expected rent will be 6 lakh and 5 lakh. Higher of the municipal value and fair rent, so 6 lakh. Now 6 lakh will be compared with standard rent, lower of the two, so my expected rent is 4 lakhs. Okay. Now annual rent. Now if you look carefully in the sums, what is given in the sums, you have a figure of actual rent received. There is a difference between annual rent and actual rent received. So look at this format. We had to write down annual rent, then deduct the vacancy, and then calculate actual rent received. However, they have given us actual rent received first, and then now we have to calculate the annual rent, because in order to see whether vacancy will be considered or not, annual rent will be compared with expected rent and not actual rent received. Right, whether the assessee is honest or dishonest, in order to see that, we have to compare expected rent with the annual rent, not expected rent with actual rent received. So just let us write down whatever we know. Actual rent received is equal to 3,60,000. Okay, now look at the sums. Actual rent received 3,60,000 and vacancy 3 months. Means in a year of 12 months, what happened? 3 months the house was empty. 3 months the house was empty. So means this 3,60,000 has been received as the rent of 9 months, right? If there are 12 months in a year and 3 months the house was empty, and the rest of the 9 months the house was occupied. So for the I'll get rent for the rest of the 9 months, right? So 3,60,000 is the rent for the rest of the 9 months. Now with the help of this, we'll have to calculate the rent for whole year. How will we calculate? Annual rent. Annual rent is equal to 3,60,000. This is the rent for how many months? 9 months. So, and we have to calculate the rent for whole year. So, into 12 divided by 9. 360 into 12 divided by 9. 4,80,000. This is my annual rent. So, now I copy it over here. 4,80,000. Now obviously vacancy is for 3 months. Okay, now 4,80,000 is the annual rent. So for each month the rent is 4,80,000 divided by 12 is equal to 40,000. Now vacancy has been for 3 months. So 40,000 into 3, 1,20,000. So it will be equal to 3,60,000. Okay. Now let us compare annual rent and expected rent and see whether the vacancy is to be considered or not. So the expected rent is 4 lakh and the annual rent is 4 lakh 80. Means the assessee is an honest one and he did not try to hide his income. So the income tax authority will consider his vacancy. So after vacancy what happened? His actual rent was less than expected rent. No problem. If after vacancy the actual rent is lower than expected rent, then the lower one will be the gross annual value. This is why I'm not telling you at every step higher of the two, higher of the two. No, we don't go that like that in each and every step. You'll have to see whether he's an honest assessee or he is a dishonest assessee. So his annual rent is more than expected rent means his vacancy will be considered. Simple. Now suppose if the vacancy was like 40,000, right? If the property was vacant only for 1 month, if the vacancy was 40,000, then the actual rent received would be how much? 440. 440, right? Now what would be my GAV? Simple, 440, right? Even after considering the vacancy, my actual rent received is higher, then 440 will be my GAV. If after considering vacancy it is lower, then also we'll consider the JV. But last and only situation, what will happen if my annual rent is 380? Suppose if my annual rent is 380 and my vacancy is 40,000. So now let's compare annual rent with expected rent. Annual rent is already lower even before vacancy. So in this case, he is a dishonest assessee and his vacancy will not be considered. So in this case, what will be my GAV? 4 lakh. Okay. No vacancy will be considered. The GAV will be directly 4 lakh. So let's come to our original sums. Annual rent was 480. Vacancy was 1 lakh 20 and actual rent received was 3 lakh 60. So my GAV is 3 lakh 60,000. Next, after the calculation of gross annual value, the next step is municipal taxes paid. So municipal taxes paid during the year amounted to 50,000. Nothing complicated in this. So we'll just record 50,000 over here. Now 3,60,000 minus 50,000 is equal to 3,10,000. So here also in the outer column 3,10,000 becomes my net annual value. After deducting municipal taxes from gross annual value, net annual value is the result. Standard deduction under section 24A. Acha. Now he has repair and maintenance expenses 60,000. So will this repair and maintenance expenses, this will be allowed as standard deduction, right? We'll write over here 60,000. No, no repairs, no expenses on the house will be allowed as deduction. Why? Because we'll get a standard deduction of 30%. So 3,10,000 into 30% is equal to 93,000. 93,000. And next is interest on loan. So he has taken a loan of rupees 10 lakh at 12% to acquire the property. Simple. If the loan has been taken for four causes purchase, construction, renewal, or repair, then the interest on loan shall be deducted. If it is not for these four purposes, then it will not be deducted. So it is for acquisition or purchase, means the interest will be deducted. So 10 lakhs into 12%. 10 lakh into 12%. 1,20,000. 1,20,000. So 3,10,000 minus 93,000 minus 1,20,000. So my income from house property is 97,000. Clear? Please copy these sums and I hope you have understood it. Now another new concept. Now do you remember when there was unrealized rent? What did we used to do? Suppose the annual rent was 4 lakhs and the unrealized rent was 20,000 and the expected rent was suppose 3,50,000. So expected rent 3,50,000, annual rent 4 lakh and unrealized rent 60,000. So means my actual rent will come to 3,40,000. Right? Now, what we used to do, we used to compare expected rent and actual rent, and whichever was higher was my gross annual value. Simply, GAV is equal to 3,50,000. Now, suppose if my unrealized rent was only 30,000, means my actual rent would be 3,70,000. So my gross annual value would be 3,70,000. But here expected rent was higher, therefore expected rent was my gross annual value. Simple. Now what if there is unrealized rent plus vacancy? What is to be done then? Very simple. It's the same as before. First we will deduct the unrealized rent, right? First what we do, first we deduct the unrealized rent and then we compare this figure of 3,40,000 with the expected rent. So this is not my actual rent. 3 lakh in the previous example 340 was my actual rent, but in this example this is not my actual rent received because there is vacancy to be deducted also. So 3,40,000 is to be compared with expected rent. Right, what did I say? When there is both unrealized rent and vacancy, what do? We compare, we first deduct the unrealized rent and then compare this figure with expected rent. Now simply honest employee or dishonest employee. Okay, so 3,40,000 is my figure, and if it is less than expected rent, then he is a dishonest employee. Vacancy not to be considered. Okay, if suppose here the figure is 3,70,000, 3,70,000, and it is compared with expected rent, so he is considered to be an honest assessee. Vacancy will be considered. Suppose my vacancy is 40,000. So in this case, when after deducting unrealized rent, my figure is 340, where it is compared with expected rent, it is less than expected rent, so he's a dishonest assessee. So GAV, vacancy will not be considered. So my gross annual value will be 3,50,000. The same thing we used to do with only vacancy. When there was only vacancy, we used to compare the expected rent with the annual rent. Only here we'll compare expected rent with this one, with this figure after deducting unrealized rent. Right? This is the only difference, nothing at all. Only if you deduct unrealized rent first, there will be no problem. So in this case, when the figure was 340, my GAV would be, gross annual value would be 3,50,000. 3,50,000. Why? Because this was my expected rent, and in this case the assessee was dishonest, so my expected rent was gross annual value. And in this case, when the assessee is honest, we'll consider the vacancy. So 370 minus 40 is equal to 330. Now 330 will be my gross annual value. Why? Because when 370 was compared to 350, 370 was more. So my actual rent was more, or annual rent minus unrealized rent was more. Therefore, vacancy is considered as he's an honest employee, and 330 is my gross annual value. You can copy these notes. The same thing is illustrated, and let's understand this with the help of some examples. So the expected rent is 100, annual rent is 108, right? Unrealized rent is 10. So 108 minus 10 is equal to 98. Now 98 will be compared with 100. So it is less than 100. 98 is less than expected rent. So he's a dishonest employee. So will we consider his vacancy? No. If he's a dishonest employee, we won't consider his vacancy, and the gross annual value will be 100. Again, I'm explaining. Expected rent was 100, annual rent was 108 minus unrealized rent 98. 98 will be compared with 100. Okay, 98 will be compared with 100, not annual rent. In the previous case, we used to consider annual rent when there was no unrealized rent, but where there is unrealized rent, we'll compare 98 with expected rent. So if this was more, we would consider the vacancy, but it is less than an expected rent, so vacancy is not considered. Therefore, expected rent is my gross annual value. Next example, expected rent 100, annual rent 108, unrealized rent 4. Now this figure is 104. Now compare 104 with 100. So this is more honest assessee. Alright, if this figure is more, he is an honest assessee, we will consider the vacancy. 104 minus 9, 95. So my gross annual value will be 95. Why? Just because after deducting unrealized rent, the figure was more than expected rent. Therefore, we have considered the vacancy, and gross annual value is 95. Hope you have understood. Please do this as your homework. Let me help you. First calculate the expected rent, then actual rent, annual rent, unrealized rent, vacancy 2 months. So if the annual rent is for 12 months and vacancy is for 2 months, so suppose 72 is for 12 months, so per month the rent is 6 rupees, right? So vacancy would be 6 into 2, 12. Okay, so first calculate the vacancy in each case, and then in this format complete the sums. So that will be all for today, and you can send me your queries and your homework on this email ID. Thank you.